The crypto space had a big week in the past week, with several headline-grabbing events. Kim Kardashian was fined for promoting crypto, the European Council passed the landmark MiCA bill, and the European Union banned crypto payments coming from Russia. In addition, the bankrupt crypto lender Celsius set auction dates for its assets. The Lunar Foundation Guard, a Singapore-based non-profit, has recently purchased almost $1.4 billion worth of Bitcoin. The non-profit said it aims to have $10 billion in stablecoin reserves by the end of the third quarter. As of Friday, it holds more than 80,400 Bitcoin in its reserves, or just under $3 billion. In the past week, the LFG has been unable to maintain its price due to a sudden drop in the price of Bitcoin. This has sparked a massive sell-off, which has left investors more than $200 billion out of pocket. The native coin of the Terra blockchain, meanwhile, has struggled to hold above $1, and this has caused it to crash. As a result, the LFG has been loaning out its reserve coins to help the price stabilize. In the last week, the Lunar Foundation Guard has traded $1.5 billion worth of Bitcoin. Its goal is to accumulate $10 billion worth of Bitcoin within 5 years. The company also recently launched its own blockchain, referred to as the Terra blockchain. The goal is to launch its new ecosystem on May 27, 2022. The recent collapse in the price of Bitcoin is a shock to the cryptocurrency community. Terraform Labs, the company behind the blockchain technology, said that it will compensate holders of its stablecoins. Despite this, the company did not give any further details about its future plans. The USD is the second largest stablecoin after Bitcoin. Its price has dropped significantly this week, with the USD at 95 cents. It is important to keep the USD nearer $1. This creates arbitrage opportunities for investors. Hence, the LFG has already purchased $3.5 billion worth of Bitcoin in the last week. Since the Terra's value has dropped in the past week, the LFG has been spending most of its Bitcoin reserves to prop up the currency. The company has said it will compensate users in the remaining reserves. It has not decided yet how this will be done. Its remaining reserves of Terra USD coins were worth under $90 million on Monday. That means that Terra's coin holders have collectively lost $42 billion. 3 Arrows Capital has fallen into the grip of the credit crunch. Its Terra USD stablecoin failed to survive the downturn, and 2 of its largest counterparties, Celsius Network and Babel Finance, had liquidity issues. As a result, 3 Arrows was unable to repay its $675 million loan to the creditor companies on Monday. The company was forced to liquidate its assets, which included a large position in the crypto markets. The troubled crypto hedge fund 3 Arrows Capital has failed to make payments on $675 million in Bitcoin and stablecoin loans. Voyager Digital, which is a digital asset brokerage company, issued a notice of default to 3 Arrows for failing to meet its obligations. The lender has not responded to its requests, and it is working with legal advisors to recover the money. The company's troubles began earlier this month and have caused pain across the cryptocurrency industry. The company's co-founder and CEO, Zhu, has tweeted that they are working to resolve the problem. He has stated that 3 Arrows will communicate with all relevant stakeholders and is committed to finding a solution. The failure of 3 Arrows comes at a critical time for the cryptocurrency market. Following the collapse of the prices of major cryptocurrencies, industry players have braced for a crypto winter. Critics are expressing renewed skepticism, and the failure of one of the biggest names in the industry has only amplified their concerns. The collapse of Terra USD is a symptom of the company's financial problems. Despite the current Bitcoin prices, it was still able to borrow up to $250 million from FTX, and Voyager has a $500 million credit facility with Alameda Research. The game has two main tokens, SLP and AXS. The first is used only in the game, while the latter is used to trade for fiat money and other cryptos. Traders on the DEX usually have issues with slippage, but this isn't a problem with Axie Infinity. The Axie protocol takes a fee from users when they make transactions, and the fees are priced in a combination of AXS and SLP. Those fees are stored in Axie Treasury, which has grown to nearly $600 million. The game's popularity has created a new class of users who feel comfortable with crypto applications. The game's NFTs are linked to digital wallets and DEXs, and it also offers a Web3 interface for its players. Users also have access to the Sky Mavis, the game's Federal Reserve. This currency can be used to play the game, but players must take into account inflation. While many people love the idea of earning money with Axie Infinity, it has some downsides. First of all, it is expensive. The game can be extremely lucrative if you're successful. However, it is best to make sure that you're careful before you get involved. Axie Infinity's gameplay is similar to Pokemon in that each character has different strengths and weaknesses. Players can combine Axies to create stronger characters. They can also sell their Axies as income. The tokens in Axie Infinity are also non-fungible, which means that they can't be exchanged for real-world currency. The game allows players to purchase Axies in the marketplace. Players can choose the type of Axie they want to raise. The player can also use this information to make the right selection of Axie. Players can also breed Axies with different lines to create a stronger team. Axie Infinity can be highly competitive. A good team consists of a backlaner, a middle laner, and a tank. The game has a large user base that tends to be competitive. There's a subreddit where players discuss strategies and tips on the game. Researching Axies before buying them will help you avoid spending unnecessary funds. Make sure that the Axies you buy are of top-tier quality. Ethereum's long-awaited e-property file has been dropped by Biden's management. The move to drop the file could have significant consequences for Ethereum's future. It is unclear how much impact it will have on the company's overall value, and how long it will take for the company to recover its losses. Meanwhile, Ethereum's developers are concentrating on making the system longer, using Layer 2 networks and rollups to improve its scalability and speed. This would allow for quicker acquisitions. In the meantime, the Biden administration is urging the Democrats to include more rules for tax compliance related to crypto transactions in the $3.5 trillion budget reconciliation package. The proposed legislation would include a definition for crypto exchanges in the federal tax code, triggering an industry lobbying offensive. In addition, it would require crypto businesses to report their foreign account holders. The Biden administration is expected to sign an executive order on crypto assets on Wednesday, and it will instruct federal agencies to investigate the risks and opportunities of digital assets. The order places the White House at the forefront of policy relating to digital assets, and will place the U.S. government in a central role in regulating them. Federal agencies have been studying the digital asset industry for years.